Welcome to ETF Trader, where we review the best ETFs on the ASX over the last fortnight. Breaks into two groups. We've seen the bearish ETFs once again, and also a mixture of ETFs with exposure to small cap Australian shares or Australian equities, China, FX, and also bonds. First off is the active ETF from K2, so K2 Australian Small Cap Fund. Now it's up 9.33% for the fortnight, and it focuses on providing investors with absolute returns. So they make active management calls or stock picking, and they can move between long, short, and also cash exposure. So they can sidestep the market if it's falling off a cliff. Now, the Absolute Return Fund in August 2020 had the largest return since inception. Now, the strongest performers within their book make up of corporate travel, CTD, people infrastructure, PPE, and Money 3, MNY as a ticker. Now, they rose 83%, 16%, and 26% respectively. These make up 3 of the 5 largest holdings for KSM. Number 2 is Cure. This is an ETF in the Biotech that we've looked at before, up about 7.3%. So it's S&P Biotechnology. It's a subsector that are classified by GICS as biotechnology. It's also got market cap filters to make an equal weighting ETF. As we noted before, they have been linked with the high growth and PEs of the NASDAQ, although they're well and truly off their highs from May and June. Nonetheless, a strong bounce over the last 2 weeks. Number 3 is VanEck China A50, up 3%. So this is VanEck Vectors, China's A-share ETF. So it's tracking the 300 index over there. It's comprised of 300 of the largest, most liquid stocks on the A-share index, and that's across the Shenzhen and Shanghai stock exchanges. Now, China has announced some strong macro data in the last couple of weeks and has recovered from COVID-19 better than most developed nations. Number 4, we have Yank. Betashares strong US dollar, 2.51% over the 2 weeks. Now, it's magnified long exposure, as we see with most of these ETFs that are geared, and we'll see in the bears as well, is that a $1 move on the Aussie dollar, a $1 move in the US relative to the Aussie dollar, we'll see somewhere between 2 to 2.75% increase in this ETF. Number 5 is Betashares Government Bond ETF, 1.85%. As the name suggests, government bond, 20 plus years ETF. It's currency hedged. So what they're focusing on is high quality, long dated income producing bonds issued by the largest developed economies in the world. And it's hedged in Aussie dollars. So we're looking at the G7 nations here: USA, Japan, Germany, United Kingdom, Italy, France, and Canada. Securities are weighted in the fund's index according to the market value, and there's a cap of 25% of any one country's dollar duration making up into the ETF. Then rounding out, we see another active ETF from INVESTSmart, 1.77%. Now, it's a selection of Australian companies that produce growing sustainable profits that have a low risk of interruption from increasing threats from the ESG, environmental, social, and governance factors. And they focus on undervalued companies with strong long-term capital growth prospects, and it's based on intelligent investor research process. Now, what we've seen is they've recovered much closer to their highs from the pre-COVID-19 fall. So we're looking at February, March on the ETF versus the index. And the key holdings, or the largest holdings, they've got Frontier Digital Ventures, which is FDV ticker, Ordinate AD8, Class CL1, Reese REH, and Pinnacle Investment Management Group, PNI is their ticker. Each of those holdings make up between 5 through to 7.5% of the portfolio. Then we have a look at the bearish side of the market. So what we're looking at here is the top 4 bearish ETFs. And as you'd expect, when the market goes down, the geared ones perform better. We looked at SNAS before, short NASDAQ. ETFS is bearish, geared, ultra short, 100, NASDAQ 100 hedge fund. So it's, again, a 1% movement down in the NASDAQ, sees between 2 to 2.75% up in the ETF, 13.02% over the last 2 weeks. The little surprises there that the market's been down. We also see BBUS, Betashares US Strong Bearish Fund, 11.9%. It's geared for the S&P 500. Similar thing, 1% drop in the S&P 500, between 2 to 2.75% in this ETF. Then similar for the Aussie, BBOZ, Betashares Australian Strong Bear. Once again, 1% move, about 2 to 2.75. That's up 8.67% over the 2 weeks. And then also just the normal bearish Australian BEAA, bears a ticker. So similar to BBOZ, just not geared. That's what we see with the market falling. We do see the bearish ETFs come up as top performers. Thanks very much for joining us, and we'll bring the leading ETFs on the ASX to you again next week.